Yes, correct. We feel that our inflation in the Philippines is much different from what many developed and developing countries have been experiencing. But that's because of of course, the COVID, the tightness in the labor situation, the supply bottlenecks, etc. Because many economists in the past have thought that inflation has been licked, and so this is a recent event for them. U.S. inflation, as you know, is 7.9%, Britain 5.5%, Canada 5.1%, Euro area 5.2%, and their target is 2%, right? So that their actual inflation is much worse than, much different from their target range. Our inflation target is 2 to 4%. And we're smack in the middle right now. January and February, inflation rate is 3%. So our inflation is much different from their inflation.
Okay, but the next set of numbers come up on April the 5th, which will be March inflation. We'll be watching those very closely. But I know for the full year, Governor, you raised your inflation forecast significantly from 3.7 to 4.3. That is well beyond your 2 to 4% target. And my question to you is, when we do start seeing secondary effects of inflation in the form of higher transportation costs, higher wages, etc., that would, I assume, have to be a time when BSP would want to step in. When do you think that is going to happen, though?
You know, we assign probabilities to these demand factors, and right now there's low probability that will happen. And also our adjustment of inflation for this year, that's actually from 3.4 to 3.7, 3.7 to 4.3 rather, is actually based on the price of oil in the world market, which is around, maybe we assume, about 120 to 140, or on average about 102 for the full year. But if this does not occur, then we'll be back to our target range. So that's where we are right now. And we anticipate, for example, next year the price of oil will normalize, and so we'll be back to our target.
Governor, given, though, the balance of upside risks to inflation, would you rule out a hike at your next meeting?
No, we actually we have already signified our intention to hike interest rate in the second half of the year. That could be as early as the third quarter, or it could be as late as the fourth quarter. So we have already signaled to the market our normalization rate of maybe 0.5 to 0.75 for the next year, for this year rather.